All right, good evening, guys. Good evening, guys. My name is Coach Chidera, your regular RCA teacher. We're going to continue from where we stopped yesterday. So, as of yesterday, we talked about the ascending and descending triangle, and we were able to finish the study on ascending and descending triangle. So now we're going to look into the next pattern that we have for the day, and it's going to be a quick one. All right, so like I said yesterday, we talked about ascending and descending triangle, and which I gave you guys an assignment to identify any of this pattern, ascending and descending triangle, on your chart and submit to the group. Congratulations to all the people that participated, whether you got it or you failed it, but at least you made an effort. So I encourage you to keep on trying. And for the ones that get it right, congratulations, you are improving on your skills. Keep it up and keep listening to the class. All right, so the next pattern that we have here is the flag patterns. Now, there was someone that sent a pattern in a group, and I told him that what is supposed to be there is a blue flag pattern. So listen to if you are in this section, listen to this class attentively, because this is where I'm going to talk about the blue flag and the bear flag pattern, because we are entering into the flag pattern right now. So now we're going to start with the blue flag. They said a blue flag is a price action within a context of an uptrend that produces an orderly price decline consisting of a narrow trend range comprised of a lower swing slash pivot lows and a lower swing slash pivot highs. Now, let me tell you how
you are not sharing your screen, sir.
Oh, sorry about that. All right. So sorry about that. So likewise I said blue flag pattern. So the vision says a blue flag pattern is a price action within a context of an uptrend that produces an orderly price decline consisting of a narrow trend range comprised of lower swing slash pivot highs and lower swing slash pivot lows. So now, after this theory, the simplest way to understand a blue flag is that first, it appears on an upward trend. All right. So for you to see a blue flag, there must be an initial uptrend before the formation of the word flag. So a blue flag, first rule is that it appears in an uptrend. Second is that the channel, after connecting the trend line, it creates a channel that looks like a downward channel. All right. Now look at what I'm trying to say. This is an uptrend. Now a blue flag will create a channel like this that look like what? A downward channel. And what do you expect? A breakout, a retest, and what? A continuation. So which means after connecting your trend line, which is this and this, that is this and this, you seem to see what? Something like a channel, a downward what? Channel. Then before the channel, there was what? A flag. This is what we call the flag. This long line that took place before the formation, which shows that it was what? A blue flag. So in other words, you will say that a blue flag is a continuation pattern. All right. So they said a success of a blue flag can be greater after a significant upside movement, due to the possible increase of underlying what? Support. Blue flag can be stronger when the swing highs that begin the pattern is also an all-time high due to possible lack of mutual overhead resistance. So what they mean is that, let's say a coin that is at all-time high and the blue flag started to form, and they say the blue flag is more greater because there's no overhead resistance ahead of it. So let's say it's a new coin that just created its all-time high, and a blue flag started to form after that all-time high. It means that there is nothing that is up there to resist the market afterwards that breakout. So you definitely say that the pump will be greater than the ones that has what? That has resistance above them. So definitely they'll get to resistance and try to resist. But the one that doesn't have a resistance definitely will do perfectly, do well. So which means on a new coin, if you shall identify a blue flag on a new coin, there's a possibility of a what? High movement. And it's a particular use. traders interested in gaining additional information by watching the sentiment read of chart will often seek out both lag due to their ability to prove the lack of selling interest during the time frame in question. So what I'm trying to say is that a bull flag shows the lack of what selling what interest, whereby people are not interested, are no more interested in selling what that token. Rather, they are interested in what buying what that asset. Are you getting it? So
Yeah.
when looking at the structural example they gave us here, you will see that that was what I was trying to say. First, it was what in an uptrend. Now we start to create an orderly price decline that look like what a downward channel. I must consist at least two lows or what two highs. Remember, it's only when you can draw a trend line. Someone made that same mistake today by sending an assignment with trend line connected on just one what highs or either one lows, which is a first rule. You are broken the first rule of using trend line. So before you can draw a trend line, you must connect at least. If you are connecting a support, there must be at least two lows. If you're connecting a resistance, there must be at least what two highs. So don't make that mistake. If not, you won't get any good or better result. All right. So now, once you have identified that it was what in an uptrend, and now start to create an orderly price decline that look like what a downward channel. So what you're expecting is what a breakout, a retest, and what a movement. So you might be asking, how do you make an entry? What are the ways you make an entry here? All right. Knowing that a bull flag is actually what an uptrend pattern. Is a bullish what pattern. Is when you say a bull flag, that means you should be getting ready to what buy. It's not getting ready to what sell. So how do you make an entry? You can make your entry after the two lows has been formed. Let's say the two lows has been formed. Now you can wait for any other lows. Let's say another low, the third low is about to form. Once it touch the trend line, let's say this line was too extended. All right, and the market hit here and bounce back again. So once you touch this line, you can what make your buy. Now when you make your buy, close half once it's touched this what resistance. All right, take some profit because it might want to swing back again to create another what low. So once you touch that resistance, close half. All right, now move your stop loss. All right, move your stop loss above profit. All right, but after closing half, let's say the breakout now definitely happened. You can now wait for a test to make another what entry. So these are two perfect ways to make entry on a bull flag. So let's talk about the take profit. How do you take profit? You take profit by measuring the distance of the last what flag. This is a flag. So you measure the distance from where it started to where it created the first what high. Then move that, clone that distance from here, the last low, or from where the last touch happened, then to where it reaches. That's where you want call your final take profit. Now, knowing that your TP1 can be here, your TP2 can be here, because those things are what resistance. All right. So that you make sure it doesn't mean that you have to ride and reach that point. You need to take your profit because we have market makers out there that will still manipulate the market to their own favor. So whatever you see as a profit, once you get to resistance, try to take some of the profit out. I have seen people see 100% in their trade and end up getting liquidated too, because they are waiting for you to hit that particular measurement that they made. No, once you see a bad reaction in the resistance, try to what take some profits. Now, if the market should reverse, you have taken some what profits and move your stop loss to what above your entry, so that even if you should reverse, you can never end up in loss. Do you understand? Is that getting clear?
Yeah, it's clear, coach.
All right. So now I've covered about the blue flag, how to make an entry, how to take profit. Then what about stop loss? All right, like I said, there is no specified way to set what stop loss. So depending on the kind of trader you are, if you're a day trader, let's say spot, you're a spot trader, after a breakout, all right, you can set your stop loss inside the channel. Let's say after a breakout has happened. Let's say after the breakout has happened, you can set your stop loss anywhere below, anywhere inside this what channel. Do you understand? Meaning that if the market should come back to this channel, that means that pattern is what invalid. Because as soon as the breakout has happened, we are not expecting the market to what come back inside that channel again. So you can set your stop loss anywhere what inside this channel. So once it gets to this channel, you'll be able to what get out of that market before you end up in a very huge what loss. Do you understand that?
Yes, sir.
All right.
No, I don't. Could you repeat, please?
You mean the stop loss, right?
Yes, the stop loss.
All right. I said you can set the stop loss after the breakout has happened, the retest and continuation. You can set the stop loss inside within this what channel. I mean within here, or this channel here. You need to set it anywhere what inside, but below. Like I can set it for me. I can just decide. Okay, since here was a support, let me just mark it, and I might set my own here. All right. So everybody will decide based on the amount of loss you wish to risk on that what trade. Do you understand? So there is no like I said from the beginning of the class. There's no specified way to set or stop loss. Everybody sets stop loss based on what they can what risk. Based on what technical, like for example, like I just gave you an example, since I see that there was an resistance, a support bar, I'll just what mark it straight and set my what stop loss or below it. Do you understand? So some traders will actually advise you to set your stop loss away from the channel that is talking about here. And when you check that, you find out that the stop loss is huge. You understand? The stop loss is what? Huge. But if you set it there too, it's not bad, but you might not be willing to risk that much. So that's why I do advise to set what? Inside. So you better lose more than ending up what? Losing what? Huge. Most times I also set my stop loss based on percentage. Like I said, I can be risking 20% of what I am willing to gain. Let's say if I'm willing to gain $10, I am willing to lose what? $2. That's another way to set what? Stop loss. You can also say, if I'm willing to gain $10 on this trade, I should be willing to risk what? $3. So I want that $3 loss which you exceed that trade. You are no more willing to accept more what? Loss. Is that understood? Understood. All right. So let's get to our chart and see if we can identify some real ones. All right. Actually, in fact, there is a blue flag coming here already that I have drawn. Let me currently on people USDT. Okay, yeah, there's a blue flag happening, and it's about to look at it. All right, this is a blue flag that we expected to take place. And we don't even need to search for it. This is one I actually analyzed. First of all, okay, look at what I just told you guys. Remember when I told you guys that you can make your entry at the first touch, at the third, starting from the third touch of the support. Now you should take your profit once it's touched what? You should take some profit once it's touched that what? Resistance, and now wait for what? Breakout. Now, I was on this trade actually. So I was expecting it to what? Break from here. But knowing fully well, using my strategy that I should take my profit once it's touched some profit, because it have not break. It's only when it break that you actually what? Confirm what? It. So now you can see what is happening. It has not break, but we are still expecting it to what? Break. So this is just an example of what? A bull flag. You can see our flag pull here, starting from here to here. You can see our first what? High, our first low, second low, no. High. Hello, can you hear me?
We are with you.
Yes, we can hear you, coach.
We are with you.
All right.
Right on.
Get some. All right. So here is our highs, our highs. You can see our low, our low, our low. So now, if you watch, if you did not take some profit, if you have entered here, you will see that the market reversed on you. Do you see that? So you should what? Take a profit at that what? Resistance, because it has not broken. It's when it is now broken that you what? Confirm it. But right now, another pattern is forming within this channel. And the pattern I'm seeing there is what we call what? A double bottom. Let me make it clear. You will see a double bottom, but let me just show you the pattern forming. So patterns form within what? Patterns. A channel. While on the smaller structure, a double bottom is what? Forming. And this is how a double bottom looks like. Can see first it look like W. So what we expect is what? A breakout, a retest, and what? A continuation. And this continuation might create what? The breakout of this what? Blue flag and what? A retest. Do you guys see that? All right. So this is just a typical example of what? A bull flag on people USDT. So we anticipate for what? A breakout. Let's see how it happens. If the breakout did not happen now, it might came back and what? Touch this what? This support before what? Creating the what? Breakout. So what I'm just anticipating here, is what? A bull flag. So let's see how it goes later in the day. But let's see the one that has happened already. Let's look out for the ones that happened already. I think I see one. Let me
Yeah,
click
this
on
one.
it down. All right, this is also what? A perfect. This was also what? A perfect one. You can see from here, the market started from going up, the change of trend, the trend that started going up, they start creating what? A channel that look downwards. Before you know it, a breakout, a retest, and what? Boom. So this is also another typical example of what? A bull flag. So bull flag and flag patterns and medical triangle are really rampant in the charting industry. So they are not rare. They are frequently formed. Like you can easily find them. Let's try and find another one. Try another one. Let's see. Another one. I won't call this one another one. That's the pattern that is this. And you get to that pattern. This one, the pattern is just straight. Like you look at horizontal. You look horizontal. There's a pattern. And you get to that. You get to that. You look horizontal. You see that they touch. You look what horizontal. That is another pattern. And you get to that. So it's not a blue flag. But it's still a bullish pattern too. So to learn to differentiate them. You understand the rules that are guiding them, you will be able to differentiate them.
I think this one now.
Which one? You can only easily get it. You can easily get it when the market is going up. So you need to first find when the market goes up. I think it should be here. This should be a good one. The chart is not fully showing.
Yes, sir.
This should be a good flag. But the chart is not fully showing. This is literally a blue flag. You can see it right here. You can see where the market started first. So it's not showing the back, but you can see it there. Boom, 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 boom. The breakout. So this breakout doesn't have what? A retest. So if you have gotten your entry here, you are in. So any question on blue flag? Any
Okay.
question on blue? All right. So the next pattern we have here is okay, you can see a real life example of a blue flag. You can see it there. You start with a flag curve, then comes the highs and lows that looks like a downward channel, a breakout. Boom. So let's see what else we have. All right, the next thing we have here.
Hello.
Yes.
Sir, you wish to ask a question.
Go on.
Yes, sir. I wanted to ask, like, how many highs and lows do you need to see before you know that the movement has been?
There must be at least 2 lows or 2 highs. Please, if you are not the one asking the question, mute yourself.
Okay, sir, I got it.
There must be at least 2 lows and 2 highs. Never make that mistake. Whatever you are doing, once you are trying to connect a trend line, there must be at least 2 lows or 2 highs. Must. So that's what is needed. So it can be 3, it can be 4, it can be 6, it can be 8, but there must be at least 2 first before you draw that trend line. So if you're not seeing 2 lows or 2 highs, don't bother drawing a trend line. All right.
Okay, so when you see it like that, which of the candle will indicate that the bull flag is about to take a breakout?
And I'm finding it difficult to understand you.
I'm asking if, like, when you see the ups and downs, like when the market is about to break out, which of the candle will you see, or like will indicate when the market is about to break out?
There is no specific candle that will tell you that a breakout is coming. All right. There's no candle that you say, okay, this is this candle that will tell you that the breakout is coming. The only thing is just for you to follow the rules of that pattern. Now, after 2 lows has been formed, all right, you can now take entry on the next low that is coming. Then is it some of the position once it touches that resistance? Then once a breakout takes place, you cannot. In fact, most breakout you can't even know when it's coming. It used to come like a flash. So you just need to position yourself at the right place and not at the wrong place. So there is no specified candle that will tell you that the breakout is about to happen. But a bullish candle can tell you that the market is getting what? Bullish. Let's say you see all these green candles forming. So it can show you that, okay, the market is about, you can see it and say the market is about to break out. But it's not just like once you see that candle, the breakout is coming. No, it's not like that. You can hit the resistance and still bounce up. Just like you see the example that I gave you guys on People USDT. Just like I gave you guys an example on People USDT. I told you guys before that I was expecting what? A breakout. I was expecting what? A breakout here. But once you get to that what? Get to this resistance, it starts to what? Reject it. If you look at it, you even see that I've already even marked my distance, my long position, this signal. You see that it was there already. So I was believing that it's going to break out, but once you get there, you can see that it's keep rejecting until it was possibly what? Thrown back. Now you can see it has already started coming back again because it needed to break. So someone that sees this now might say that it's about to break, You cannot be sure about that. It can still get to this resistance now and bounce off again. So you just have to wait for the breakout to take place. Understood?
Yes, sir.
That's clear.
All right. So the next on our list is the bear flag pattern. All right. It is an inverse of the bullish blue flag pattern. So they say a bear flag is a price action within the context of a downtrend that produces an orderly price increase. All right. So an orderly price increase is that the channel looks like an up channel, uptrend channel. So remember on the blue flag, the channel looks like a downtrend channel. That's what they mean by orderly price decrease. So now they say it's in the context of a downtrend. So bear flag happens on a downward trend. So they also say that it produces an orderly price increase. When we started producing a channel that look like an uptrend channel. So consisting of a narrow trend range comprised of higher swings / pivot highs and higher swings / pivot lows. So the background says that the success of a bear flag can be greater after a significant downside move due to the possible increase of overhead resistance. Bear flag can be stronger when the swing lows that begins the pattern is also in an all-time low due to the possible lack of underlying support. So when the market is an all-time low, there is no support. You can't find any other support. So once it breaks out, the movement used to be high because it will try to find itself a new support. So this is how structurally a bear flag looks like. Let me draw it. First comes with a downtrend, then now creates an orderly price increase. So it will do like this: boom, 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 and a breakout take place and boom. So this is just a typical how a blue flag looks like. So it's happening in a downtrend, now start to create an orderly price increase, then a breakout took place and a test and continuation. Right. So now look at a typical example they gave us here. Say traders interested in gaining additional confirmation by watching the sentiment read of a chart will often seek out bear flag pattern due to their ability to prove that the lack of buying interest during the time frame in question. So they say the traders usually used to look out for bear flag pattern to confirm the lack of buying interest, meaning that sellers are setting in. So once they see a bear flag forming, they use it as a confirmation of lack of buying interest. So you can see the kind of real life example they gave us here. You can see this one. You can see them within other channels. You can see, yeah, boom, 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 dun, 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 boom. So, or we will have to get to our charts and find a real example. So how do you make entries on a beer flag? You make entry at the word resistance. Remember, you can only sell at the resistance and buy at the support. Don't forget this rule. All these rules, if you have pen and book, be writing them down. It will help you. So once you are making a mistake and refer back to the rules, you will find out that you are also what? Making a mistake. But if you don't know those rules, you might be making a mistake and you won't know that you're making what? A mistake. So you can start positioning yourself a short position or a sell position at the third word high. So after this first high has formed, this second high has formed. So let's say it was extended and goes back again. You can start what? Shorting from here. All right. And once you get to the support, try to what? Close some and wait for what? A breakout. So another way to make an entry is what? After a breakout, a retest and what? A movement. So these are just probably all the same, the way you make entries on this what? Pattern. So for the stop loss, after the breakout, anything inside was the channels, you can set your stop loss here. Sorry. Set your stop loss here or outside of the channel. So for me, what I used to do is if I make an entry here, let's say the third high. So I'll have to set my stop loss outside here. You understand? Then after the breakout, I will now move my stop loss within what? The box or the channel. Do you understand? Any question?
Yeah, that's clear.
All right. So let's get to our chart and try to identify. So all right, so you can see example they gave us. We have like I'm coming, guys. All right. So let's look out for a beer flag. I think it's already within this channel itself. Yeah, look at this.
I think this one. Yes,
It's within this channel. Let me get it for you.
exactly.
Can you guys see that?
Yes.
Can you see that? You can see how the blue flag, I mean deer flag, happened here. First, it started.
Yes, yes, sir.
First, it started with what? The downtrend. Now, before you know it, it started creating what? Orderly price what? Increase. Now, this is our first high. This is our second high. This is our first low. This is our second low. Now, this is our third what? High. Now, imagine that I shot from here, like I told you guys, I placed my position here. Then at this
Yes.
particular place, I took some profit. If you look at that place, you will see that there was a retraction. The market would have likely what go up, but because of the momentum has increased, it broke out. Now at this breakout, there was no retest, so it just went on to. So I hope you guys can now see how the bear flag work.
Yes, sir. Opposite of low
The
flag.
blue one. Exactly. So what about taking profit? You take profit by measuring the previous flag pool for the definition of option. What I mean is this. You measure from here to here. You understand? Now you clone it and you drag it. Let's see if you reach. Boom. What do you see happens there?
Oh, exactly the same length.
You can see that once it hit that length, the market starts to what? Reverse. So that's why most times those measurements can also what? Help you. But those measurements doesn't mean that you must wait till it reach that measurement. But what it means that measurement or anything close to it should be your final take profit, because there's a high possibility of what? Reversal. So this is how you measure your take profit. If you watch before, there was a line you can see there was a line that was here on this analysis, and that was a measurement of the previous movement. But I have to use the line to demonstrate it. So this is just a typical example of what? A bull flag, a bear flag. All right. So assignment I will giving you guys is you should try to identify either a bear flag or a bull flag and send to the group. Let me see how we're improving on the chart pattern. All right.
Is it okay? Another assignment.
Yes.
Okay.
The previous
Okay.
assignment.
Hello,
No,
coach.
so this is the previous assignment.
Hello, coach.
Yes.
Please, if someone do not take profit when you said we should take profit down here, that means that the
Okay.
person will lose because it's not too clear to me.
You know what I mean is that your profit, now that the market is reversing, your profit will keep as your profit will start reducing. For example, if you enter there, you are still in profit at this market, but it has been reduced because of what? The reversal that is happened. So if it goes back up to here, you start being in what? Loss. Is that understood?
Okay. Well, thanks.
Any other question? Okay, seems no question. Do we have time? Okay, let's see if I can cover just one more chart pattern. Although the next chart pattern we are going to show is not necessary, so it should be a quick one. All right. So the next chart pattern we have here is the cup and handle pattern, and that will be the last for tonight. All right. So the cup and handle pattern is very simple. What you see in the cup and handle pattern is what? A bull flag. See, okay, let's just read. It said that a cup and handle pattern is formed after a pullback from a swing high, rallies back strongly to the previous swing highs, and stalls due to the overhead resistance. The English you said will confuse you. The price action that then stalls much like a bull flag. This is just what you need. So in a cup and handle pattern, it's just a bull flag that you're looking at for, because it's just a cup and a bull flag. So the cup is not necessary. So once you see a bull flag, that's what you need. If you start looking out for the cup, you get yourself what? Confused. So it stalls much like what? A bull flag with slight downward what? Pressure before breaking out of what? Overhead resistance. They say the power of a copper handle lies in the fact that after hitting overhead resistance from the previous swing high, a very minor correction is put in. The price then break out past resistance, which can be a sign the demand for the security may be increasing. Copper handle pattern can be stronger when the next logical place of resistance on the chart after the breakout is considerably distance away. Forget about the big English. This is how a cup and handle pattern looks like. It first look like a cup. Then what next you see is what? That's like a blue flag. Boom, 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 boom. Yeah. And you know that this is how a blue flags look like. You come with a downtrend, an uptrend, then create an orderly price decrease. Boom, 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 boom. You see that there's nothing different. If you mark out from here, this thing and this are what? The same. So this is why I say you won't need to be stressing yourself looking for the cup. All you need to be looking out for the what? The handle, which is what? A blue flag. So once you see a cup and handle, you also see what? A blue flag. So do you see why I say you should only look out for what? The blue flag. You see that?
Okay. Yeah.
All right. So this is a typical example they gave us. And see a typical example they gave us here. A child, a cup here, then a handle. And if you look at the handle, you see that here is a blue flag and a break what? A breakout. So let's look at another example here. You can see another example here. Charge a cup, then you see a blue flag. So definitely we are looking out for what? Mainly what? A blue flag. All right. So this is where we have for the class. So the take profit, the entry, the same thing applies to us with the blue flag, because that's what you see as what? Your entry. So from tomorrow, we move to what we call the wave pattern. You have a question? Yes.
Yes, please, looking at looking at the first example, example 1.
Okay.
I'm thinking maybe if we consider not zoom, please don't zoom the other way, zoom the first structure that was about forming. Because looking at the first structure that was about forming, we could see that it could be a copper handle bed. It was not a copper handle. So how can we differentiate between the two? I don't know if you understand me. You see, was trying to form a copper handle. Looking at the example 1, it was trying to form a copper handle. Then it went downwards to form the real copper handle. We could still say the first one was a copper handle, but then it was not. So how can we really differentiate?
No, both of them are copper handle.
Oh, okay. Oh, no. I'm talking about the example 1. Looking at the structure.
Which is this?
Yes.
Which is this?
Yes.
Okay. Are you talking about here?
I'm talking about where just yes.
Are you talking about here?
Yes, sir.
Yeah.
Yes, sir.
You mean that you wanted to form a copper handle?
Yes.
But it will actually
Yes.
Actually, for me, what I'm seeing here is a double bottom. All right. What I'm seeing here is what a double bottom. That's why I say don't stress yourself looking out for a cup, because you might not be getting it right. So what I'm seeing here actually is a double bottom. A double bottom is like what? A W. Having what? 2 lows with a neckline, which is this. So that's what I'm seeing here. You can see that.
Okay.
So that's not a copper handle for me. That was
okay.
That's why I
Because
say the copper handle.
I saw something like the handle at the end, so that was what confused me.
Okay, no. All right. So that's why I say you should just be looking towards the blue flag.
Hello.
Any other question?
I have a question, sir.
Okay, go. Go on.
Yeah, I wanted to ask a question concerning only here where this double bottom is, because you said the double bottom, when after a double bottom there will always be a bull market, but after this one it formed now a cup and handle, which was first of all descending.
Okay, understand that the bull has already happened. This is hold on. This is the first low. This is the second low. All right. Now this is the neckline. The movement from here to here is the book. It doesn't mean the overall trend of the market. No, this is just a smaller time frame that you can just do your day trading or your scalping. It's not the total of the market. So once the boost, the top bottom has hit, you understand that? So we have not even treated the double bottom, and we are still getting there, but I'm just using the time because I see it here. All right.
Yeah, I'm getting, sir.
All right. So this is where we call it closure for the night. So
So
see
I
you
have a
guys
question.
tomorrow. All right. Go with the question. Please. Oh, wow.
Please, people should try and mute themselves.
All right. The person that wants to ask a question, Joshua, is that you? You can unmute yourself.
My question is actually that when we are using this cup and handle pattern, do we need to make reference to support and resistance? Because I did that the second example. When there is a breakout, I can't really figure out any resistance there. Unlike the first one, like the handle of that cup and the first, it seems to be on the same level of price. This price line. It was on the same price line. But the second one, the breakout was not. It's not matching that resistance level. So do we
From what I
give
can
reference
tell,
to
all right, from what I can tell, this can be a higher time frame. Once you break down the time frame, you will see those highs and lows very well. All right. So one candle can actually even be a full pattern. For example, one daily candle, when you break it down to 1 hour, 1 hour or 30 minutes, you can even see a full pattern. Yeah. So definitely you might be using from the stage picture I'm seeing here, might be a higher time frame, which if you should break it down, you will see the highs and lows very well. All right. So why if you look at this one, it seems like they actually break it down in a lower time frame to be seen clearly. That's
all right, sir. Clear, sir.
all right. So from tomorrow, we will continue with the rising wage and the falling wage pattern. You can went on to read ahead of the class from the book that you must all right, I see you guys tomorrow.
Somebody
Okay,
is raising.
good night, everyone.
Does anybody have a question?
I don't think so.
If you don't have a question, mute yourself. All right, seems nobody has a question. This is where we're going to call it a closure. See you guys tomorrow, and I hope you enjoyed the class.
Hi, good night.
All right.
Good night.
Thank you, sir. Boss, enter want to make some correction there.
You say?
I said there was what I dropped on WhatsApp. Please, I want you to check our WhatsApp group.
All right,
and make some correction.
I will. All right.